Okay, hi there, guys. Now, you got your boost juice. My boost juice is just a coffee there, Gino. How we going there, guys? So, hope you all had a good weekend. Um, I'm back on board today. Alrighty, how are you, Mel? Yeah, no, it'd be good to have a chat, mate. I've got a couple of things I just want to go over today. It's more the broader market. I think it's always important to look at the broader market to see which way we're getting led astray, up or down, by the US anyway. Where are we? So, if you can all hear me loud and clear, just give me a thumbs up or a little smiley face. And we'll get cranking. Okay, perfect. That's all I need to know. All right, guys, welcome to Trade Setup, the live stream. What are we now? The 12th of November. Kids getting excited with Christmas, so it's keeping me busy. I've got to be careful not to drop the not to drop a hint. This Santa Claus is actually mum and dad, so I keep forgetting about that. Anyway, that's getting a bit closer. Markets are still moving around, as you know. We'll take a look today. So I'm going to go over again the Dow and the S&P charts, see where they're at, see where we're at. I know we're probably rehashing a lot of the same old stuff, but I think it's important just to continue to be focused on what the market's doing, or the overall market anyway. Otherwise, if you're not noticing they're extended and so on and so forth, and you start diving into the market thinking, okay, it's all over, on that FOMO, so the fear of missing out, then if things come crashing down, they can come crashing down pretty quick and hard. Saying all that, anyone that's new, welcome. Welcome to Trade Setup. You'll see the general advice warning just in the middle of the screen there. Twitter on the top left, Facebook the top right, and bottom right hand corner, subscribe to us at YouTube. There's a lot of free content on there once you find the YouTube channel. And I'm hoping to have a few little issues. Probably gonna have a few dropping in and out today. Don't know why. YouTube's a bit iffy. Is anyone having any issues? I think it was the last stream, not the last stream, the second last stream. It still looks like it's loading. It's not, well, from my end anyway, it's not up there. So, and I think you can't actually see it. If everyone confirms it, I'll just delete it off. It's a waste of time having that sitting up there. Some good content too. I was on a roll that day, I think. Let's close it down. Get my screens up and running. So you should all be able to see the chart there. If anyone's got this, it's FLN. It's flying at the moment. Good to see that take off. That's the weekly. Now, Friday night, the US, it backed off, but it's only really gave up some of the gains from not the night before, the previous night. I think it was Wednesday night. Absolute crock. Um, just let me know if I'm not having a bit of an issue coming through. Anyway, we'll keep plugging away. Yeah, so higher US or higher interest rates means in the US means higher borrowing costs. You get emerging market issues. Um, Anyone borrowing in US dollars is going to have higher funding costs. Companies, corporates, higher funding costs, higher borrowing costs. Banks are going to do all right, but it's going to crimp it a lot. So the focus is well and truly back on. Well, it's never really come off the US dollar, but there's always been a bit of hype. Market rallies, especially when people are going bottom feeding, trying to pick the bottoms when we've had this market pullback. Let me just refresh something. So that's why I'm expecting that we've got a bit of a bounce now that focus back to the US dollar. Um, It'd be interesting to see how it goes going forward, um, whether or not we're going to get another run lower. And saying all that, let's just click over quickly to all the charts. So I just want to get this up. Just 1 second here, guys. Okay, when we go indices, see, there we go. That's your weekly chart. So there's your dailies. Daily is down on Friday. Thursday night was quite good. Well, okay in the US. It only sort of held the highs from previous session. Previous session, yeah, rocketed up. And you can see this big push up. It's because it took out the anchor on the downside. Now, it doesn't mean that, I know I say talking about anchors and things like that, it did break the anchor, but it doesn't mean it can't come crashing down. It's done it. If we look back on the weekly, Back the start of this year, maybe we can get that up. The start of this year, similar type of scenario. You got the market come crashing down, had a pop up, retested lows, come all the way back up. It was looking quite positive then. Then it's come all the way back down and retested lows, and that took the good part of a couple of months. So I don't think we're out of the woods yet. I think there's going to be another leg down. It's just for what I'm looking at is how far down are we going to hold a high low, and we're going to start putting in the hard yards to start building a base where we can work back up off that base again. Something like this. So this is what we just drill on the weekly on the Dow. That took the good part of what we hit the lows somewhere in start of Feb, when we started building back in April. We sort of retested for a third time, slight high low, and it was only up until about July when the market was a lot more confident. And we got a nice steady run up right up until, well, recently about October, start of October. So we punched up to those all-time highs at 2,700 or thereabouts. So that's a fair hike. That's a good part of the year when the market's spent a good few months trying to build that base, retesting a few times, popped up, pulled back, and built a really clear higher low at 24,000 back in July. So what was that, Feb to July? Good part of 5 to 6 months to do that. So if we get this similar type of price action, we have to chop around. I'm just talking about the US here for now. We start to chop around. You would expect at some stage we're going to sort of bounce around above 24, hopefully, or whether we wash it out, who knows, or whether that's going to be the longer term line in the sand at 24, bounce around. I do expect a few months of, not, I wouldn't say choppy price action. It's going to lead to a few. If the market starts playing out that way and we start finding a bid or finding some buying support on the Dow, which is going to translate back over to the ASX, which we'll take a look at it in a second. Some buying support, that'll be clearer. People will start to see it. Okay, that's what's going to happen. There's going to be some buying opportunities. Always going to be some buying opportunities. Even now, when we've got two shares on, both are going our way, and that's generally happening when the market's going down. So I don't mind if it keeps going down, to be honest. If that's the trend. So yeah, there's going to be some good buying opportunities. You just got to pick your quality setups rather than just diving in because it's overextended or anything like that. Always stick to your plan. As long as you put together your plan, stick to your setups that have been working and that have got a good, we call it edge. You've got an edge in the market of a certain way. It's got a good edge in the market, then stick to it and be selective, because I seriously think the only difference between winning and losing is how much work you're willing to put in to find those setups. You know, when the market's bullish and everything's going up, it's pretty easy. You can pretty much don't have to be that selective. But when the market's like it is, it's getting a bit choppy. We might be extended up here, potentially another leg lower. We could be heading down to 25,000 on the Dow. We chop around, it's going to drag us lower. All these sorts of things. I think all you have to really do is put in a bit more work on going through. Well, this is why I do it anyway with the technicals, is just flicking through charts and looking for quality setups, building yourself a list and waiting for them to play out. And like I said before, on your setups and take them when they do play out, because don't second guess it. You never know what's going to happen. I hope that makes sense there, guys. Anyway, but so that's the Dow. The S&P is going to be very similar. Similar. It's just touched on, and this is the broader market. Don't forget. So the market's pressed down, popped up. You build your anchor to the leg down. This is your secondary leg down all the way down to 26. Now we've really retested, unlike the Dow. The Dow blasted through. We've retested. So this could be. We'll have to see how the S&P goes. I mean, the trend is still down. It hasn't really broken on this, where it has technically on the Dow. But it doesn't mean anything. We could just press back down, and you want to see how it reacts. I do expect a secondary leg down. I don't think any market will just recover on a dime like that, especially with the amount of headwinds that we're seeing going forward on the US dollar. Like we just discussed before, once the US dollar starts picking up and it's going to put pressure on emerging markets, on just debt in general, you wouldn't see that, especially the fact that things are starting to get, if they are overpriced, everyone's viewing them overpriced. How many more opportunities you got? Just have to be a bit more selective, like we're saying. But be interesting to see how this market goes. The S&P, I do expect a bit of a test down here, whether it's 26, 27, somewhere in between there or higher. I want to see a test down and then it get rejected. Now, if it tests down and goes straight through, good. We're not in the market. We're not loaded, and that's the beauty of being, just being patient, I guess. But the longer term trend you can see on the weekly, to me, it's still up. Your key levels are down here at around 25.50, And this could be a big clear out because every time it gets up into new highs, you know people are going to get tentative with a rise in US dollar, overvaluations in the US. That's just dragging us around with it. Now let's take a look at the XJO. For me, we still haven't broken. You can see up here we're getting extended now. What was it? Friday. We were reacting on Friday, if I get this right, to Thursday's movement and the day before. We actually popped up. Have I got the right data? Yeah, that's today. That was Friday's action from Thursday night in the US, which was okay. Thursday night and then Wednesday night. So I had a big Wednesday night. We popped up, which is this candle on Thursday. They held on to the highs, and you can see our market just really tentative. So our market's not willing to push through this level just yet at 59.42 to 45 or 59.50, just as a round number. I'm going to draw this up. I'll get that down to there. I want to draw that. So I've got this level here. That's great. Don't want that, do I? Right, so you've got pretty much a level. Don't like that line either. There we go. Let's get a straight line. So you got that 59.50. We didn't want to go. You can see by the price action on Friday, even after a couple of good days on the Dow, we've had a couple of good days on the ASX popped up, driving right up into that level. You can see here we're overcooked pretty much at the moment. Doesn't mean we can't go through it, but it's just something to take in mind. We've had a good bounce. We had leg down, pop up, leg down, little minor bounce, big leg down to 56.25. So your lows around 56.25. Took a lot of effort, and it wasn't just one foul swoop. You popped up here, a bit of a pause, extended back up into that 59.50. So maybe this is going to be the base, but it hasn't confirmed. We haven't confirmed, unlike so this kind of price action, big day down, and it holds, one little green candle, and then bang, capitulates, another green candle, and takes it out again. That's different price action. And this little bounce, had no steam in it whatsoever. This correction was pretty much sideways to slightly up. And I think at this stage we were saying best be very, very careful that the market doesn't drop. And it did, and we missed a trade, which still kills me if no one noticed. So that price action there was a hell of a big difference to that. So remember we always talk, when the market heads straight down and it starts to grind, like this, expect a secondary move down. And then when the moves down start to, you can see by the what do you call it, the inclination of the descent, a couple of big words for me, like here and here, they start to ease off. It's just showing that buyers are stepping in. So it's coming to a zone where they're starting to step in. Either that, or you can see this just capitulated. It bounces harder. That's probably not exactly what we're saying, but bounces up quite hard, whereas that bounced nothing. That wasn't even a bounce, pretty much sideways action. So this is different to what we've seen in the past on any sort of bounce or half decent bounce that we've got probably over the last couple of months. So you've got to take that into context. Obviously, it gets up here, and that's probably bargain hunting. It just means that there's more people in the buy it here than here and here. Okay, so it's getting to that zone where people are go, okay, I'll throw some money at this. I'll look to buy it, and it starts to take off, and they start to chase it higher. Then probably here you're getting a bit of FOMO of some traders looking to say, okay, that's the line of sand, I've just missed it, I'll buy it up here. Doesn't mean that they can't get squeezed out. So we're really just trying to be patient and letting this either pop through the highs, come back down. I think what we're going to see is a bigger hint once it gets back down to 57. Is this going to just drop like a stone again? Or are we going to find some buying support above 56.25, or are we going to retest? How are the buyers going to act a second time round? And that's all we're really interested in at the moment, and we're just going to be patient to see that play out. So yeah, that's the plan of attack. I'm not convinced, especially on Friday's price action. And don't forget, it's a long weekend in the US. Tonight they're closed, so it might be another reason why we got a bit of, I guess, what do you call it? What am I looking for? What am I the word? Not congested, sedate price action on Friday, knowing that the US is closed. Although we had that trading in the US on Friday night, still just going ahead to the long weekend. in the US anyway. I'm more inclined to think it's just because it's right up near that anchor. So you don't want to be buying it up here when the US has had a big night. You're right up to a resistance zone. You're better off waiting to see what happens. You're either waiting to see whether it blasts up through there, and if it comes back down, you can start to hold a higher low. Then you'd probably be jumping into a fair few stocks. The last thing you want to do is see it push up. You buy right at resistance. It could be washout. It could just retest and then come straight back down, and then hold lower highs all the way back down to retest down to 56.25. So really, you're not really wanting to buy up into resistance until you get confirmation with price action, and we haven't seen that yet. So that's why I'm just sort of sitting there waiting. Not the only one, just below that resistance zone to see how, if there's going to be some buying, we're going to tip it through. Ideally, I'd like to see it push through and then pull back, and then see what happens from there. Or what? Just remember, this trend is not broken until we break that anchor. The trend is still down. We could easily, let me just clear this up a bit. We could easily do something like this. We've come down, pressed up, big push down, and we sort of done this sort of thing right up here. What happens if from there we just start to unload? You get a bit of chopping around here and we start to come right down. It could lead to another big leg down, especially if there's some buying and you get the lower highs pressing the market down. You do not want to be in at that stage anyway. If we see that, so wait for the price action to play out. Ideally comes down, starts to hold. Well, I'll draw this here. Ideally comes back down and starts to find some high lows just in here. And then we could potentially, in comparison to that low, building a weekly high low or some intraday high lows just off that 56.25 level. I want to see that play out first. All right, that's the bulk of them. I don't really think we need to look at what's happening in Europe. They're not really leading us anywhere. Still heading south. That's the DAX rolling over. There's no real clear support in line there for it to hold. FTSE, yeah, they've got a support zone around that 68.50 or they're about 68, 69. You can see through here, they haven't, nothing showing me any sign that it's holding up, apart from this little pop up here, but that's so much of a grind. I'm expecting the FTSE to roll over again. So yeah, just keep an eye on it. We've got Hang Seng, still heading lower. There's no real support zone where you could expect it to react off just yet, anywhere close. And what about the Nikkei? Yeah, they've taken out this level around 44.50 through here, lower high, still pressing down. Yeah, that still looks fairly weak. And look at that action today. So yeah, all right. Still, we've got a bit to worry about. Keep your eye on it still. I'm not saying what or what not to do, but just be cautious that the markets are starting to look a bit heavy up here, especially on the Dow in the US. Now, if they roll over again, we just want to see the pace of the move down. If they don't, okay, you can still edge into some quality stocks or quality setups. Right, the two we got, FLN going gangbusters at the moment. Anyone that's got that? Does anyone have that? Mel, do you still? Yeah, I'll tell you about CLV. Worth looking at too. FLN, if anyone's got that, I think we're looking towards that dollar mark. It looks quite clear. There's still some volume coming in. See that volume that's picked up on this little spike the last couple of weeks? A good little pickup in volume, which is nice. You can see that volume picking up there, it's pressing it higher. Looks like there are people chasing it. I'm looking towards that. The problem is we've taken a partial, so I'm really inclined just to really tighten up. The way this is extended, I'm inclined to tighten up my risk, and I don't really, normally you'd hold it below a higher low. Problem is it's right down here. Your clear higher low is around 55. Now, I'm not willing to put my stop, once we're getting at 62.5, hold the stop on a remaining below 55 at a small loss when it's right up at 87, 87.5 at the moment. I would rather just trail it up. We've got our stop here at 70 at the moment. Moved it today. It may even have to tighten that up. I want to see if it projects hard the next couple of days into a dollar and we start getting a pause. I'd rather take it off and watch for a pullback or get stopped out, because if it was really strong, it shouldn't come back. Ideally, I mean, it could come back and build a major high low, then we probably could sit there and look to get back in again, look for a re-entry. It's that weekly. Look at that weekly chart. That's looking good. It's pressed up off that 50 zone. The next sort of line in the sand was up towards a dollar. See how it reacts if it blasts through. then I'd rather give it a bit of room because it could just come back, build a high low, and then go again, and then it's looking up towards $1.60, $1.70, up to the highs at $1.80. So this one's looking good still. And the only other one we've got is RFF. It's still plugging away nicely, getting a bit extended on the daily, but the weekly's still got some room to move. I think this anyone that's been listening to me for a while, this is the kind of thing I love. There's a lot of reasons why I love this weekly chart. Let's just go. So you can see that contraction, bang down, up, down. They were holding that level around 2, pop up, lower high. As soon as it gets through 2, it washes out. So I love seeing a washout too. You can see of $2, then bang straight back up. And it's broken, once we get this leg up here, it's broken up and out of that contraction. You don't know what's going to happen. From there, it's really about the entry. And of course, we got this pullback, built a higher low at around 205 to 210, that zone 3, and then started to lift again. So on the weekly, you'd probably take it from say 195 to 220, 25 cents, add that to give or take around 205, takes you to about 230 or 235 zone, which probably lines up with that resistance there somewhere. Whether it can just blast through and then you're going to be gunning for those highs at around 240 to 45, that would be awesome. But either way, we're up on that one. That weekly chart looks great. It's got all the hallmarks that you'd like to see from a strong chart, and you can see that trend continuing higher. So it's based around that weekly chart that looks very strong in my book. We just have to watch what they start. What I'm really looking for is just that if I can get 230, 235, somewhere around there, and it starts to pause, I'd rather just take a partial on that, and then be done with it. Especially with the overall markets, because don't forget, when things are really stretched and the market starts taking a dive, they're probably the first ones people are going to run, depending on the fear factor involved on the pullback. If it's fear driven, it's not just a nice healthy correction. If people are viewing it from fear, they're reading the news too much, believing that what others are saying, the market's going to drop, they're always going to be looked to book gains first rather than get stopped out on others. It's just a natural, I guess, progression of people. The sort of mindset, people will always hold on to a loss, but never really hold on to a gain, which is a shame. So yeah, anything that's stretched like that, and probably FLN will probably be the first to get knocked around a bit, but we'll see. All right, I was going to look at that. So CLV. So put your stocks in, guys. What we want to take a look at. I thought I might just before we get going. Someone mentioned, I think it was someone mentioned crude oil. And I've got my eye on crude oil as well. Mentioned it, and then just our forum saying, okay, it's come off quite hard, and it has. And don't forget, they don't like crude too low. Any of the producing countries that can actually lift output or reduce output or production, they don't want to see it, drop off too much, because it's just the lower the price, the less getting per barrel. So being, I guess, a relatively manipulated market, you can see that, and there has been a major sell-off from sort of around that 77 mark. It's come right down, but it's come right into a zone around, say, give or take, $60 a barrel, 59 to $60 a barrel, and it's probably clearer. This is the daily, easy to see on the weekly. You can see that rising support. It sort of popped up off the lows, and this was way down at about 26 a barrel, and that was back in 2016. All right, so 2016 popped up, sort of consolidated sideways, touched again. You've got your low here at around 42, good leg up, and that's come right back into sort of that breakdown where originally broken down around, was it 2014, end of 2014, when it just pushed down through those major lows around 77. We've come down, built our way back up, reacted off that zone, but I'm not completely bearish. Oh, what have I done? Oops. So what happens if you don't know how to use your system? There we go. Got it. Auto, that's what I was looking for. So it's coming down. It's sort of in that zone. So I'm really looking to see how we react in this zone here. And ideally, I don't care if it washes out, washes down, but I want to see some buying. If we can get some sort of reaction up off that zone, and then I'll be looking for the pullback. We pull back, we get extended like we are now on the downside. So the pullback of selling, the sellers are trying to push it lower, but it's being met with some buying pressure, and it's building at a higher level. Then you'd probably be looking for this continuation up, and we'd ideally like to see something like this. Okay, you get markets pressed down, reacted back up. It's had a good, healthy pullback. You can see it's a controlled pullback just by a couple of moves. Sort of chop sideways, drop down, chop sideways, drop down. If you can see this type of move in here, that's what I'd be looking for. So if we can get that, that'll be great. I'll draw it up what I'm looking for in oil. And there's a difference. I mean, there's always a difference in price action. If you just get used to looking at the price action and what's playing out, and how would you attribute that to strength or weakness? Now, if the market just pops up here and then you start chopping around at higher levels, that for me is more weakness, and that could lead to a big, a secondary leg down, especially the way this leg's come down. If we don't, if we start ideally grinding up like this, I'd like it to press down at a higher level and then start holding again. If we can do that, yeah, that'd be great. I don't mind if it sort of grinds back up and comes back down, and then you get buyers stepping in at a higher level again, as opposed to sort of the 60 mark, 59, 60 mark. They might be stepping in at 61, 62. And if it starts holding sort of those like this scenario, a little inside high low, I think we could be working our way back up to 77 and then through, but just keep an eye on it. But you want to see that extended like we are down here. We're extended, so that selling pressure is quite heavy. We've come down to a zone where, okay, we're only watching it for potential buying to step in. Don't be the first buyer. Let everyone else do the hard yards. And if stochastics sort of come back up, press down, to sort of that overextend on the downside again, but we're holding a higher level, great. Then it's worth, I guess, keeping an eye on those oil stocks. Or you can keep an eye on here. Just if they start to take off, you get a good setup. So be it. Off they go. What else we got? So that was oil. There's nothing for me on the oil side that's doing too much yet. Better to look at the weeklies. That weekly trend up has come back to this is Santos, Woodside. It's still grinding high. It's this latest move down is just cleaning out a few people. It's in the overextended. So potentially some of the stocks are showing us similar signs. It's back to sort of that zone where if oil picks up around the 60 mark, potentially you're getting stocks that are hovering around that. They're in a pretty good zone too on the weekly. A zone for action to start taking place. This is Beach. There's only the few that I look at really. Could, we'll see how that goes, but could start to lift. Now, CLV, let's get into that. MQG. All right, so chuck some stocks in there, guys. I don't have that many I've got on the radar. This is an alert we sent out today on, it's going now, isn't it? LYL, I can't even say that, Lycopodium. Podium. It's more than weekly. Look at this weekly chart. It's grown up since pretty much Feb, we've spike high to 575, and you can probably find that it's not really in the zone there, and it's come off there. So a lot of heat's coming out of that market, but in respect to this is your full leg up. It's holding higher levels, above that $4 mark. This sort of price action for me is quite positive. It looks quite good. I still think it's got some work to do. I still wouldn't mind to see it pop up, pull back, and building a clear higher low, somewhere around 425 to 450. If you can do that, this could be one to go for a longer term run up to the previous highs at $7. But that's the price action there on the daily. It's mainly the weekly going off. This is contractive price action. You got lower highs, lower lows. You got this little pop up here, and it's come slam back down into 4, cleaned out these lows. So what I want to see is if it does come back down again, I want to see buyers step in at higher levels, because they never really have just yet. There's no, potentially here they were looking at it, and that was a bit of a clean out. So still comes slamming back down. End of last month, end of September, start of October, and it's lifted since then. So that's one. Got my eye on that. CLV was the other one. Who just mentioned that? Mel. I like this one, but I'm just debating my. Look at this is the weekly chart. You can see that sort of chopped around here. It sort of went sideways through 2016, 2017, started 2018, had a good run up. Once it sort of got through this mess around 70 cents. It's gone bang straight to $1.80. But again, that's another one. You see, when the market's gone so hard like that, it's a good sign. I mean, you've got to be patient with things like this. If it can chop around here, but it's holding above that 130 mark, the longer it holds above there, the better sign of strength it is to me. But when you got things that go so hard, if you thought that it's just run out of steam, longer term story is not very good, they should come down fairly hard, rather than just hold at higher levels. When they hold at higher levels, it's just a sign that, okay, either people who want to accumulate and have let it run on, and as soon as it starts pulling back, they start to buy in and support, but they're not getting out. It's more of buying at higher levels for anyone that's trying to bail. Someone's soaking it up, so they're soaking it up at higher levels, which is a sign of confidence. Now, so that's your weekly chart. If we drop it down to the daily, and we just draw this up, there's a few little things. I'm just trying to be patient on this one, and if I miss it, I miss it. That's what's got to go through. What's go through my head anyway. This is sort of what I'm looking at. You can see that, I don't even know what you call it, triangle, flag. It's sort of, this is what I'm looking through, and it's around that, was it 153, 4, that resistance zone through here. This could easily hold there, go straight back down. There's nothing to say that this is the start of something good for me. Your rejection around, say, $1.33 down to $1.27, thereabouts, this rejection zone here. So we've got rejected it once, twice, tried to build here. We've still got some selling pressure coming in. Good rejection here, rejection these lows just down here. So you can see that it's rejecting that zone, even at a couple of times at a higher level, slightly higher level. But on the flip side of that, there's still a bit of selling pressure that's coming in. You've got sellers here, slightly lower here, potential sellers through here. So up until we pick a direction, you don't really want to just jump in and try to preempt it, because then you're giving yourself a 50-50 chance. If you jump in here and you buy it, yeah, you could be right, it could take off and you've got a nice early trade. But the same token, if you just bought it here, nothing to say that the sellers aren't going to win out, and this market rolls over. This gives up the ghost and just capitulates from there. We head straight back down to 70 cents, sorry. So you want to see a clear sign that one side's winning out and the other side's starting to give up, between buyers and sellers. And we haven't got that just yet. It's just, for me, looking at all this action, when it starts to chop around like that at a higher level from, say, 70, this zone through here. So what the biggest retracement's from 180 down to retracement 130. I can't figure that out. What's that? 50 cents. It's probably under 50%. So it's probably at a 30 to 40% retracement, isn't it? So something on the higher end, retracement sort of, what would you say, on the lower end, below sort of 50, so around that 30% mark retracement, that's a good sign of strength. And the longer it sort of chops around here, it's going to start perking some interest. I mean, it's perked mine. Mel looks like he's onto it as well. So it's one of those things, just have a bit of a look. If we can pop up through this, just clear that up. If we can pop up through here, I'd ideally like to see it pop up, get up through resistance and have a bit of a pullback, and then build sort of these inside levels. And I think if we can do that, clean out that, it's like just clearing the way. By then you've broken up and out of this contraction, something like that. You've got your higher low, bang, in you go. And hopefully you got your stochastics not hovering around 80%, it could be around 40, 50. And it looks like it could get some legs to it. The weekly's not in a bad zone, just below 50% for buying. So things are starting to line up on CLV, I'd say. But for me, like I said, you want to prove it. You want to be proven right. And there's times when, it's part of trading. This thing could just take off and you're waiting for your higher low, like we just drew here. Doesn't play out, it just goes bang, up she goes, and you're sitting there looking at it again, God, I missed it. But that happens. It's better to wait for that. I mean, that's my style anyway. That's my trading plan. That's the way I trade. Waiting for that high low, for that extra bit of confirmation that you're going to be right. Buyers are on your side, and it's better than a 50-50. I'll probably give it 80-20, 80% right. 80% that's going to play out once you get this break up, pull back, buy, step in at early levels. When I buy on that rise there, I give myself about 80% chance I'm going to be right. It's just, there's going to be times when you miss out. That doesn't matter. Still, on the flip side of that, there's going to be times when this doesn't play out and it just goes bang straight back down, and it's going to keep you out of just as much trouble. All right, what's next? MQG. All right. Any questions on that, guys? Anyone like that one? I don't know. Was it Clover Corporation? Let's get back to here. MQG. Just at a quick glance on this daily, potentially selling it. This, not that I would sell it. I'm just saying that looks more like a sell than a buy than anything else. You could obviously flick it back if you get these sorts of, and that's quite, I just write up exactly what I was looking at. Okay, so it's quite clear. You've got the markets, pressed up, pressed up, pressed up, pressed up. It's come back down to say around this zone, which you can see is quite clear, 120 bucks, pressed up. It didn't get much above that resistance, whereas, there's your resistance. There's your resistance. They just went on with it. Instead, we had a pullback. Pop up, we had to go. We should have gone from here. We should have taken out this high. Instead, we got the lower high, even with a little washout, a washout of those highs. That's just suckering in. What it's doing is dragging in a few buys that buy on that break, looking for a push up through 130. They get sucked in, they get stopped back out when the market drops, and you get another lower high here, bang, obviously gap down there. Then you got a break of this 120 mark, okay, with this just capitulation through there. Touchdown 110. What we've done is we've lifted again, and look what's happening. Potentially, we just got another little washout there. I'd be a bit concerned if it gets down through this low, and I don't even know, just below 120. If we start to, and you can even see when we've opened down and pushed up, I'm not too positive on that. And you can see the stochastics are hovering and overbought. So last time it was really around that zone, we're right up towards 130. Now the buyers are given it a good nudge. They're really pushing hard, but sellers look like potentially they're coming in at a lower price. Anyone that's been bought it through here and held through this pullback could be starting to get where they're going, look, I've come back to either break even, I'm down a small loss down here, I was probably on a big loss, sitting on a big loss. It looks to be running out of steam. Is it really got the oomph to get up and make the new highs? I want to get out. So there could be bailing. So if you get more people, and that's what happens when you're finding a lower level, when the stochastics pop up, goes back into overbought, markets come into a lower level than the previous time, sort of in that overbought levels. Yeah, for me, it's just a sign of that sort of increased strength of selling. So I would be inclined to believe this if we start chopping around here. So we pressed up, pulled back, sort of retest the highs. If we start doing this, get down through there, and then we pop back up and we can hold a lower high, I'd be looking for a sell on Macro, and then you'd be looking for potentially, oh no, 128 down to 110, 18 bucks from there. Where does that take us? 118, 106, give or take 105. So you've got a potential trade if that's what's going to play out from 124 down to 104, thereabouts. I'm just picking some levels out. But just keep an eye on that. I mean, this could be a zone where sellers are starting to stack up, okay, and they could be looking. And if you can get on the short side, or if you're long, just be wary of it. If you get on the short side, then yeah, this thing could roll over. Now, just flicking it back to the weekly. After saying all that, you always got to check what the longer term charts are doing. Now, this is a longer term uptrend, so you've got to bear that in mind. If you do want to go short, just be wary. So just look at what we're seeing here. I'm potentially just looking for the daily. I'm looking for this setup. I might go short. I've got to bear in mind that if we get down to sort of 110, it might fall short. So from the weekly, we might get buyers stepping in at 115. If I'm proven wrong and they get down to 115, I'll just take my small gain, call it a day. But if there's more selling to come, we've got this press down here and it's popped back up, it's struggling above 120, and we are starting to accelerate into 110, then look, this could easily go a lot lower. And it could be a big contraction or big correction of this longer term weekly trend up. Does that make sense to you guys? So you got to have both. If you're going to go short, you got to know what that bigger time frame is also doing, and where your risk is laying, and what you want to see. If you don't see it, you're better off just bailing and calling the day, especially if you're sitting on some gains. Anyway, that's how I'm interpreting Macquarie. So I find that the daily doesn't look strong, but the weekly, sort of bounced off the MAs here, bounced off the 110. It's had a good corrective price action, good weekly candle a couple of weeks ago up. last week was just an uncertain sort of a candle. You can see that spinning top, whatever you want to call it. It's just hanging around those highs. If the daily plays out, we should expect weakness, but where to? Is it too early to get weakness? I mean, if we do something like this, I'd expect that to play out for a bit longer. I'd expect maybe a week or two, and it chops around here. And if we start holding a weekly lower height, then yeah, I'm expecting potentially a push through 110. And again, it's just managing your risk. If you do get short, manage your risk because no one knows what's going to happen. What have we got? John Knee. Knee. So this weekly, I know I've been looking at this weekly here. Okay. So it's had a good run up pretty much since the start of the year. Good run up from, what was it, about 60 cents. And this would have been a prime buy. I don't even know if we ever alerted that. Do you remember if we alerted that, John? Just going to check my charts. As you can see, I probably missed quite a bit too. Anyhow, no, let's check something else. No, I think the last time we alerted it was here. That was a long time ago. 21st of May. So we're back in here. Actually, don't tell me that was right it. So there, I mean, looking back on the daily, that was beautiful. I think we did alert it May. Oh, kick myself. See, that's why I don't like going back on things that I've missed. Kills me. So we alerted it just before this pop up there, and it did play out beautifully. So that was a prime entry around here. You can see that, looking for that high low. It was probably a bit of a tougher one, but yeah, all in all, it played out. It had the longer term structure. The weekly was lifting. You can see the weekly popped up through that high with this prop up. Held the highs, you want to see that. So if it's holding the highs in the weekly, you know there's going to be further strength on the weekly chart. Buyers are starting to step in, so you just drop down to your dailies, look for your entry, away you go, and manage your risk from there. Now it's more back to your weekly. We've had a big run up to $1.90. It's corrected. It's reacted off the sort of the MAs. Sorry, g'day Peter, how are you, mate? Welcome. Any questions? Just chuck them in. Now the MAs, I've got my EMAs, which are 20 and 50. And I use it for a guide. You know, if the 20 crosses the 50 on the upside, I want to sort of look for longs and I want to look for my pullback to the MAs, and you know, away you go. And the same on the downside. I'd rather be the MAs 20 below the 50. You know, and you're looking for the MAs to expand because you want to be, if it's starting to expand, you know that move is starting to get a bit of heat into it. We're starting to get a bit of a run on. All right, so we've got this pop up here. It's got extended, and of course, when you get it extended like that, you're probably going to have a deeper correction, but it's all in proportion to the overall move. If we go into the daily, really what I'd be looking for here, and it hasn't quite played out. If I wanted to buy, again, you have to, well, in my book, you want to wait for that higher low to play out. So for me, even though you've got this little pop up here, that wasn't really a higher low. If anyone looks at that, now the difference between that as a higher low, I don't count that as a higher low because I think this could easily top over here. It hasn't broken any anchor, or at that stage, it hasn't broken out of a trend. All right, so I'm always looking for something like this, breaks up, and then you look for your high low, however it plays out. Whoops, something like that. I love that kind of setup when it pops up because that's pulls back, it builds your weekly high low. You've got an inside one, you've got a lot to work off, and a lot of things are starting to stack up when you get this price action. Now, this hasn't played out here. You really wouldn't want to buy it off that high low because it hasn't broken the anchor, hasn't broken up, and a lot of time these things can happen and sucker you in. So this could easily topple over, take out 120, you're back down to 90 before you know it. But if it starts, it probably, the fact that it was it Friday touched to 155, I think. it could be starting to show some signs. So this little grind up here, if we can get, you can see, so this is the little grind up we've got so far. If we can do this, maybe pop up here, and ideally what I'd like to see, I'm just going to draw this out properly. All right, if we can get that, I would be looking for from there, maybe a press down, and I wouldn't mind it being a sharp fall, and then buyers starting to step in, and you get that set up on that. So you've got your longer term high or low starting to hold an inside level again, and away you go. And by then you've broken up and out of the contraction. So it's nearly there. It's something definitely to keep an eye on, I would say. It's getting extended up here. So if you couple that with extended about here, it hasn't broken the anchor. It's just traded right up to the anchor. How much more buying power has it got to just blast it up and through? I would have expected on Friday, it should have gone straight up and through if it's a very positive market, but instead it hasn't done that just yet. And this little move up like that, I'm not too conducive. I like to see it bang up in one sort of foul swoop, then pull back. That's a stronger buying signals than anything else. So does that make sense? Sort of what the difference of what we're looking for? This could easily topple over from here because it hasn't really broken up out of contraction, or that's still within that pullback, how we define a pullback. All this move down here, it still hasn't broken that yet. It's just showing a few little, and these could be sucker plays. I mean, the MAs are still down. We're at the top, above the MAs. I'd rather, with this price action, I'd rather see it pulled back. If we see this, when the MAs are starting to curl up or flatten out, great. Because that, to me, is a much stronger signal than what we're seeing just here. Does that make sense? We've got the MAs are going up, they rolled over. Potentially, if you just bought it here, it doesn't mean anything. They could roll back down again. We've got a deeper correction. You get caught. Or they start, we pop up here, have a good little run up. MAs touch or cross to the upside. Then we pull back and we're looking for the first high or low after they cross. All right. LLC. Let's get into that. I hope that made sense. Lauren. Oh, no, I thought you had quite a few in there. We'll get onto LLC and then I'll click over to Wes and Sun. Monthly charts will do. LLC. Whoa. Lend-Lease. If anything, you'd want to sell it. But in saying that, you wouldn't sell it. It's just the fact that it's down. When things happen like that, you can see this price action is controlled. That's great. If you start getting a high low, then you can be a bit more confident. Things gap down like that for whatever reason. Don't know why, what the news is. These flush out a lot of people and they take a long time to repair themselves, the price to repair themselves. That's only a daily. If we go back down to the weekly, a clear level through 1550, 15 to 1550, bang, one foul swoop, gapped to that level. You can see it's gapped straight down sort of that 15 to 1550 zone on this, was it Friday? Bang, hasn't looked back, opened weaker today. So to me, that move is people just bailing. They're taking a hard hit and they're getting out. Does that make sense? So if that's the case, if they're out, you can sort of write those sort of people off. If anyone's been in that situation, you've been caught like that, whether it's news driven or whatever, you've got caught on a heavy loss. If anything like me, you're bitter. I'm always bitter on things like that, and it could look like a good setup, but I've still got this in the back of my head. I don't like that stock. I take it personal, if that makes sense. So I wouldn't be the only one. I'd say there'd be a few people with that kind of mindset. It just means there's less fuel to potentially jump back in. So you need some new buyers that haven't got caught in this, that look at it as a fresh opportunity rather than someone that's licking their wounds, or they could be revenge trading. But does that make sense? So it's sort of, that's going to just kill the sentiment a bit for a while. I would expect anyway. So for me, your next level line in the sand is 12. So if you're looking to buy, wouldn't be touching that anywhere until it gets sort of 12, down to 12. I want to see a lot of work done on that first. Yeah, I want to see a lot of work done on that before it starts to build again, and then you want to see these kind of reactions, a strong reaction up, and then sort of it gradually grind down, and then if it grinds down and retests, okay, another strong reaction up. And if it grinds down a second time, you want to see it build a higher low, all off this weekly chart. Wouldn't be looking at the daily at all. Be looking at that weekly chart and then just looking for something like this. Now, look at this, 16 to mid, that's 6 months worth of price action before it started to lift. Then it started to pop up with this little leg up here, mid to end of the year. What was that? August when it popped up, and then it sort of grinded up. Then you got your first high low from the press down, this leg down. When it first started finding a base at around that $12 mark, it was towards the end of the year, November. So was that 10 months? 10 months it took for that to build that base and start to get this next leg up. And that was your first inkling that it's playing out from your weekly chart. And it didn't even have that kind of drop out of the sky like that. So keep an eye on it. If you're in, yeah, just be careful. I'm not saying that the fact is that it's got cream like that. Generally, it's going to start finding, a bit of bargain hunting sooner or later. People jumping up, and I don't think the bigger boys, if someone's going to have to build a position, they're not going to do it in one foul swoop. It'll be built over a long period of time when the confidence is picked up again. All in all, better things to look for, better trades. Now, what do we got? West Farmers. West Farmers was a short for us. So anyone that doesn't know, we shorted this 50.35, somewhere up here. We got out at 45, don't remember. Let's check the stats. WS Farmers, 50.35 down to 45.60. We took a partial earlier than that at 48.10. It's always hard when you see the partial miles away from you got out. So what were you thinking? Anyway, so that's that roll though. So that played out well, and that was sort of on that weekly. And you couple that with Wes Farmers as well. You couple that with just the overall global weakness that came into the market. We were looking for a short. It's more of a hedge. I was also looking at, if anyone doesn't know, looking at Orange Origin as a bit of a hedge too, and that played out beautifully. Just didn't get into that one. This week down, we noticed it about here. This would have been a prime setup on the short side, and we would have taken potentially $1 out of that, or we'd still be in. Probably a partial at $1, and then just you can easily, if you were in this one, drop your remaining exit just above that high low, above 70.35. Put your stop there. You locked in some gains on the rest, and just call it and just see what happens. That would have been another short that we did unfortunately miss on that one. But where's Farmers? You can see that it was a short. It played out well. And the reason why I wanted to have a tighter stop because of all this price action. You can see years. If you can draw that up on a bigger picture, and this is a big picture scale, it's quite clear that you've got a big zone through here. You got a bit below that, back into the zone. A bit above the top end of the zone, back down, back down. So it was really just range trading for a good part of 2014, 15, 16, 17. Was it 1, 2, 3, 4, 4.5 years? 4 years, pretty much sideways. And I know it's quite broad. This is longer term, but this is the first time it broke up out of that range. And now we're coming back down. So you're sort of testing that resistance zone from the other side. So it's becoming, resistance becomes support. And it's not a clear cut level, but it's more of that zone around the 45, 46. It has reacted up off there. So if you're watching it, look, probably not a bad idea. Lauren, watching that for more of a longer term play. That was your initial reaction, your first reaction, strong reaction up on your weekly charts. You can see it's overcooked down here. Last time we overcooked, we're right down here. Here it was sort of down sort of the bottom end of that range every time we got oversold. You can see that probably got a bit overcooked down here. But what was that? 2015. So really extended outside of that range there, straight back in again. Not straight back in. It was a good couple of weeks, but you can see what I'm saying there. Most time it's got extended on the downside. It was to the lower end of that range, finding support here, here, here. Next time we're extended back down here, but we're up. It was more of a retest of the breakout zone. So what you'd be looking for, what I'd be looking for is, again, your high low. I want it to be above 45. Good little pullback, and then spend some time. I don't want to see it just pull back a couple of days, bang, straight back up again. I don't think that's a strong setup, especially when this has been coming down for the good part of a few months. I want to see it chop around here, chop around a bit here, and And if you're looking for longer term, work off your high lows. High lows are just that extra confirmation that you're not the only one looking to buy. People are stepping in early off the longer term weekly. I mean, this is your chart you're focusing on, and this is your zone. You need to see this hold. All right. So if this comes straight back down, takes out 45 and comes straight back down to 40, not strong. It's completely different. All right. But the fact that oversold here, just like we're marked up on that chart, we're back sort of down to that 45 mark, just at the top end of the zone. We're retesting it. Sellers are given a good nudge to get it from, you know, up here when it was around 53. Good nudge straight back down. Couple that with your global market, the fear, all that sort of stuff. Fear probably drove this a bit lower than what we expected, but it has. You ideally want to see that it's pressed down. You want to see it pop up, chop around a bit, maybe retest, and then start to lift. And if you can get that, you can get an entry, then yeah, go for it. And you're probably looking towards at least 53, maybe above. It's going to take some time though. What was the other one you got there? And Sun. Sun's not as clear cut. That's your weekly charts. If I was going to mark that up, that's below I'm really interested in. Back to my weekly. Suncorp. All right, so it's pretty clear. It's, longer term, you've got this sort of a trend up. So really, you can see the price action up. So it goes sideways, good leg up, more sideways. This potentially is the next leg up, but you can see how this price action here on this leg up is a lot different to what we're seeing. It's still choppy, so you got to look at it and go, oh, is that just a big washout for a big rollover, and then we're going to break through these lows and at say $11, or we're going to start holding up. If we're going to hold up, you want to see it hold up within, above this support zone, because that rising support zone, potentially around 1250 to 13 or 1350 even. Hold up there, and again, for proof that it's going to hold up, it's the daily, it's your high lows. Look, it looks like it's potentially doing it. I mean, I don't take these sorts of setups because you can see, and this could just sucker in a few people, just be careful. You can see it's pretty much, buying it on a break there. Yeah, it looks quite good, and that's your trend there, but it could easily wash it out and straight back down again. And don't forget, it's extended to the upside there as well. Does that make sense? So it's getting extended there. So if you're pushing up into resistance zone 1, 2, 3 times, and you're extended on the stochastics, it's taken up a lot of energy. You can't get through it. The selling is still fairly strong, so potentially needs to clean out a few more. A few of these buyers that bought in here, maybe clean them out, retest down here, and then chop around. I still want to see some time up to build that sort of price action. I want to see it. This is just the one test down, but it's tested 3 times on this little 1420 zone. So for me, that's a bit more weakness to come. If it blasts up through here, okay, maybe I'm wrong, but I'm still not convinced. If it pops up here, it could just be a washout, and then come back down, clean you out on a pullback, or not just a pullback, further weakness. But if it pops up, pulls back, and builds a high low, okay, then maybe it's worth reassessing and looking at it long. But again, your MAs are down. For me, the MAs are down. We haven't broken the anchor of this leg down. We're just assuming that this is where it's going to pull up. There's no proof yet that this is held because no anchor's broken to this trend down. Unlike, sort of this move up, that's a strong move up off that support zone. Pull back, you've got your high low, you buy it through that break there, your risk is just here, and okay, it played out nicely. You potentially, I don't know where you would have got out, but you can see the difference here as opposed to this sort of choppy price action. And it hasn't broken through yet. Sellers still, sellers were in here, high low, sellers, they're still, popping around that 420, whether they're defending it, whether they're just don't any more a part of it anymore. But I'd assume I'll be waiting for the sort of that breakdown and then see what happens for your longer term. And that's all because, stochastics has taken a lot of buying energy, but it's still running into a brick wall in a way. All right. I hope that makes sense anyway there, guys. If not, I tried. All right. I think we'll call it a day there. Thanks very much for joining me. Any questions, just remember you can email support@tradesetup.com.au. If there's anything that's just not sitting well, if you want to question some of the things we've talked about because it's not making sense, feel free, and I'll see if I can get back to you. Always good for a chat, as you can probably see. All right, guys. Thanks for joining me, and I'll be back in on Thursday at 12:30, same time. Hope you enjoy the next couple of days, and I'll see you then. Cheers, guys. Bye.